gosh, look at the crowd.
Come this way.
Those who spread goodness radiate happiness to everyone around them. Introducing LOLC Finance Credit Cards. Fuel the goodness in you.
Welcome to LMDtv. I'm Ashwini Vethakan. Joining us this week on Talking Business is the President of the Institute of Chartered Accountants of Sri Lanka, Manil Jayesinghe. Welcome to the show, Manil. It's good to have you with us.
Thank you, Ashwini, and it's good to be here with you.
Now, Manil, according to the Ernst & Young Global Integrity Report for 2020, 9 out of 10 respondents said that the pandemic has threatened ethical business conduct. How can corporates overcome this?
I think that global report basically identified 3 areas where this whole disruption has impacted how businesses, the ethics of businesses and things like that. So it identified that one of the issues is this our disruption in the traditional working patterns, especially with remote working and working from home. The second area that it identified was because of the disruption in supply chains, and the third area was the reduction in staff levels. So in order to address some of these areas where the pandemic has threatened the ethical business conduct, the organizations now have to ensure that they embed the corporate integrity into their processes. Especially, this remote working has created a lot more challenges. It has created the flexibility and the ease of work, but at the same time, it has created a lot more challenges. So things like, when you work from home, you're not in a controlled environment, then that requires a further strengthening of your, ethical practices to ensure that you continue to meet with those ethical values of the business. Second one is, of course, this whole change in the supply chains. So it's a question of now building partnerships. You can see even today, a lot of companies which originally had their own supply chain delivery through, let's say, shops and shops, today are using service providers like maybe Uber or PickMe or things like that. So then the question is, how do you build a trust partnership with these third parties, and also to ensure that these parties also have the same ethical values in conducting the businesses. The third area would be it's all related to data. While this data is a great source and automation is a great way to go forward in this new normal, it also brings about a lot more challenges in ethics, in that sometimes we have access to this data, we use this data, but as I mentioned earlier, in an uncontrolled environment. So we don't know who else can have a look at this data. There may be sensitive information. So things like that. At the same time, while we leverage on data to conduct our businesses, we also need to be aware of the increased risks that are open in relation to the way we do business, and specifically the ethical ways we do business.
In your opinion, what is the general sentiment towards corporate governance and ethics among local businesses?
Actually, it's a great question, actually. One of the problems I have seen in Sri Lanka, this is my personal observations and view. Sri Lanka is a small economy, and our business community is also relatively small. So even though I believe there are a lot of corporates which entrench high ethical standards in their businesses, we also have to understand the inherent risks that are there, which to some extent dilutes that high standards, if you may call it that. What I mean by that is, so we are a small economy, we are a small business community. So we have something like 290 odd listed companies, and maybe about 1,600 what we call SBEs, which are significantly large entities which are not listed. But as you know, even in the stock market, even in the listed company space, many of these companies are closely held. So it's not really widely held. So when there is that element of where the companies are closely held, this has a challenge towards corporate governance and also to some extent maybe ethics, because there is bound to be some degree of influence that comes through this particular structure that I'm talking. So there are challenges to, we know that the many companies, even though good governance tells that the chairman's role and the managing director's role might need to be separated. That is because the managing director is more in the execution of strategy, whereas the chairman is supposed to have oversight over that execution. So if it's one and the same party, sometimes it's difficult to deliver that, to achieve that objective. Again, another area that I feel that we have some challenges would be the true independence of directors. So we say that a certain component of the board has to be, in under corporate governance, have to be independent. But the question is, when you are having closely held companies and a very small business community to deal with, how effectively are we achieving the true independence criteria? I have also found that the lack of professionals in the market space sometimes is a challenge for companies to identify and bring about the necessary skills and knowledge into the board. Say, for example, specifically audit committees require people with technical accounting skills, and sometimes there is difficulties in finding such people to fill those posts. So there are, I would say, some challenges in achieving the ideal state of governance, corporate governance. But given the environment, I think we are doing quite well. As I mentioned to you, we are a small business community, so that in itself has what I call inherent issues, which sometimes is difficult to overcome.
What is your take on the so-called Pandora Papers, and what are the implications, if any, for tax havens across the world?
You're putting me in a bit of a spot, I think, and also these are things that are coming out in the market right at the moment. Actually, these are the first time we have had this kind of situation. A few years back, we had the Panama Papers, the leak of the Panama Papers that came out. Now it's a Pandora paper. So it's similar sort of situations. So this revolves a lot around these tax havens and companies and individuals using these sort of tax havens to do certain activities in order to either reduce taxes or not pay taxes. And some also say that these havens are being used for money, to some extent of laundering money and things like that. The countries that offer these tax havens will argue against it and say that this kinds of environment brings about development in those countries, like attracting capital investments and things like that. But others will argue to say that these actually take genuine revenue sources for governments to basically use for spending in their own countries. So I'm not too sure which way it works, but these tax havens can genuinely be used for what they call tax planning, but it can also be misused by people who are trying to hide money or who are trying to minimize or reduce taxes. I think even in today's papers, there was these articles how some of these wealthy people have used these mechanisms to manage their taxes. Say, I think there was something reference today to say that in the UK, if you buy and sell property, there are certain taxes that it attracts by this mechanism where the property itself is owned by a company or an entity in the tax haven, and you buy and sell those companies, you actually prevent the change of hands in UK, even though the ownership keeps changing, but there is no change of ownership in the UK, and through that mechanism, you are able to save taxes in the UK. So these structures are being used for that kind of activities as well. In that sense, I think you may have heard, Ashwini, that the US has come up with this agreement with many countries whereby they have got many countries to sign up to say that each country will start levying a minimum tax on all businesses, especially these multinational type businesses. I think they're talking of 15% tax. So which is trying to eliminate these tax havens, and some of these leaks and whatever is also related towards, I think, that whole equation of trying to move towards eliminating some of these practices. So that's yet to come. So the generally governments today are frowning upon these tax havens, even though in the past these tax havens were used as mechanisms to, I suppose, manage or reduce taxes in certain jurisdictions or countries. So, meaning I don't know whether it's the implications are good things or bad things, but the implications are that most of these things are now they are coming to an agreement or an arrangement where most countries will try to avoid these tax havens and then start taxing at a minimum level. But the difficulty in this whole equation is, sometimes countries, smaller countries who are really starved for foreign investments, then they are also restricting the mechanisms to attract those investments into those countries. So I don't know, there were the goods and the bads of it, but of course the bad part is that these are being utilized by different individuals or peoples. One is to dodge taxes and the other one is to some extent launder money as well.
And on that note, we'll be going in for a short break. Welcome back as we continue our conversation with the President of the Institute of Chartered Accountants of Sri Lanka, Manil Jayesinghe. Let's talk Budget 2022. What are your expectations in the context of key reforms, including the possibility of wealth tax being reintroduced?
Ashwini, now, actually, if you look at the current situation, the Sri Lankan economy has taken some massive hits. Our domestic economy has taken a hit, and our export economy also has taken a hit because of maybe tourism. For the last 2 years running into 2020, we lost about 5 billion in foreign inflows, of which about 3.5 to 4 billion would have been from tourism. 2021, I believe still the numbers are totally not out, but again, we would have had that similar equation. So for an $80 billion economy, these are, I think, huge hits. At the same time, we have also had to continue to meet our debt obligations. We have met them in 2020. The challenge will be 21 also. We have met some of these. The challenge will be the 2022. The other day, the governor came up with the 6-month plan. So these are things that are there. These are actually present in our economy. We have also seen that tax collections in 2021 has had in 20 and 21 has had a massive reduction. So the question comes about as to how government is going to finance its activities with dwindling economic income sources. So given that, I'm sure they will come up with various other mechanisms to raise taxes in order to finance a part of the government's requirements. The bad thing about some of these things is, whether everyone who should be paying taxes in the net. Now, if everyone who pays the taxes are in the net, then obviously we will find that the ability to raise money will be greater, and therefore they don't have to come up with these kinds of difficult choices. So the unfair part is some of these things are obviously aimed at the people who are already paying taxes, as opposed to not really doing anything to bring those guys who are not in that net into the net, so that that burden is felt by everyone. So that is one of the concerns that I have. But introduction of wealth tax by itself, if there is sources that the government has to raise money for its activity, and therefore these are the sources that are available. Well, on principle, I suppose one can't argue against it. But one of my biggest concerns is that by doing some of these things, it gets directed towards only a certain part of the population, and not everyone who should be in that gets impacted by it. This is one of the concerns that I have continuously had, because if one goes around on our streets, the types of vehicles that are floating around, I don't know whether we have as many taxpayers or whether those guys are all in the tax net. I'm not too sure. So the question here is as to certain government seems to squeeze the people who are already in the net as opposed to looking at people who are actually not necessarily in that net and not paying their due taxes, I guess.
So, what more must be done to provide opportunities and incentives to attract young talent to this profession?
A good question. Actually, the profession worldwide also is having this issue. At the moment, we are to some extent struggling to attract the talent to our profession. One of the issues there is, it's the millennials. Is as a profession, what I mentioned to you earlier, requires us to be a trusted profession. Now, in order to be trusted, we are deep rooted in our knowledge, because we have to be able to continue to accumulate the high standards of knowledge, plus the ability to use that knowledge in doing what we are doing. Now, both those creates a problem because both those require time to mature into having that knowledge and practices. Unfortunately, today the younger people don't want to waste that kind of time. So if you want to become a chartered accountant and it takes 4 years or so, today the youth want to see that they would want to qualify in 1 year. So clearly we become unattractive because on the one side we have to continue to maintain public trust, and on the other side the people who are coming out into the market do not want to spend that kind of time in order to become competent in order to maintain that sort of the public trust. So this is the two angles. In addition to that, lately, if you notice that we have also had, the industry has had various issues which has got highlighted, like from the time of Enron. I think there has been continuous barrage of things that has happened in the market, which basically also creates a problem because the younger people will look at all these things and see that the impacts that it is having on professionals and various people who have been in those entities. I'm not anyway saying that they shouldn't have been in that position and action should not have been taken against them. But when you're looking at from the other side of the coin, these guys are saying, well, why do I need to go into that and get into this type of hassle? I have so many other opportunities available, which I can do, and it is much less in the public domain as well as less hassle. So these are the things that we are really grappling with at the moment. We have to produce professionals who are able to keep and maintain that public trust. At the same time, we have to be attractive enough for the younger people to come and join the profession, or at least make it a profession. It has to be attractive enough. So this is the balance that we are trying to achieve. And also, some of our important contributions are not really seen or appreciated. You need to understand that if the accounting profession was there, capital markets would likely to not run smoothly as how it is running, because the information required for capital markets to function smoothly is provided by the accounting profession, when it comes to financial reports, auditing. So all that is given by the profession. So if there were no accountants tomorrow, the question arises, how will these markets and economies function without the accountants? So those are the hidden values that we contribute to an economy. But because it's hidden, the markets don't probably see it or appreciate it that much. And that in itself is a problem when it comes to attracting talent to the profession. So these are areas that we have to work on and strike that balance where we have to ensure that we produce the quality of professional that the market demands, which will continue to maintain that public trust. And at the same time, we have to be attractive enough to attract the younger talent into the profession so that the profession continues to move forward. Those are my views on that.
Sri Lanka is gaining recognition in the global BPM BPO industry. So what steps must be taken to leverage this?
Okay. So this BPO BPM industry, in the last few years, we have been getting recognized, and primarily I think the recognition has come from the IT. The focus is on the IT industry. So I think we are gaining a lot of recognition in that IT BPO sector. And if you see, I think the other day, Slashcom was also saying that we are trying to grow this industry to be, I think, $5 billion industry when it comes to inflows. Now, that is all focused on the IT industry. I'm also saying that we also have a very vibrant accountancy profession in this country. We have, so for example, CA has about 6,000 members. Of course, not all 6,000 are in Sri Lanka, but it has quite a number of them, say about 60% of them in Sri Lanka. We have a vibrant accounting profession. Then we have CIMA, we have ACCA, we have CMA, we have AAT. So we have a lot of accountants out there. Even in CA, for example, even though we have only 6,000 members, at the intermediate level, we have about 30,000 people inside the system. Now, one of the things in the accounting qualification is that our qualification is based on international norms. So, for example, the standards that we have in Sri Lanka are international standards. So, many of these people who qualify are easily adaptable to work in any country worldwide. Now, I mentioned that is, if that is the case, we should easily be able to be the provider of these services for the BPO industry. We have a few here, few BPOs which are focused on the accounting side, but that is an area that I think can gain a lot more traction. And also, we should be able to get more people into this. Statistically, if you know, we have every year about 180,000 students which pass the A-levels. Now, of that, only about 30,000 ends up going to the universities. Of the 30,000, now I hear that they are going to increase that to about 40,000. But then there is huge talent pool there. If you look at the differential, what do they do? So we have a huge talent pool which we can train them in disciplines like accounting and things like that. And whereby that can also go into this BPO industry. So we have a huge potential. It's now a question of getting our act together, having a focused destination and working towards that, which I think we have already started. I know that there are one or two multinationals who are interested in putting up in this space for IT as well as accounting, putting up BPOs in Sri Lanka because of the fact that we have this talent pool. And I think if they start doing that, we can also grow that talent pool because on the other side, we have a supply, which are the A-level qualified students. We have a supply which we can turn around into this talent pool.
Well, this has been an interesting conversation. Thank you for your insights this evening, Manil.
Thank you, Ashwini.
Coming up, we have the latest updates from Life on Earth. Stay tuned.
You love the feeling of being renewed. To stay beautiful every single day. To breathe just like we do. Because you are truly delicate. Protecting the ones who've been with us through the years. With Sayalac Care, the only wood coating that truly protects you. Sayalac Wood Coatings from JAT.
Welcome back to the show, and here's an update from Life on Earth. While youth development improved earlier in the decade, the COVID-19 pandemic has disrupted this trend, and initiatives have been centered on young people. Between 2010 and 2018, the Global Youth Development Index increased by 3.1%, recording improvements in all areas apart from its political and civic participation domain, and the Middle East and North Africa region. Since the beginning of the pandemic, lockdowns and school closures have had major impacts on educational outcomes, young people's job opportunities, and their participation in civil and political life. A UK study reports that youth well-being has declined at a quicker rate than older respondents during the lockdowns. However, young people are taking charge of their own health, caring for others in their communities, and innovating for healthy change. As for the nations leading the Youth Development Index 2020, Singapore ranks first, followed by Slovenia, Norway, Malta, and Denmark. According to the report, young people are projected to comprise 19% of the global population by 2075. The share of countries in the Youth Development Index 2020 that recorded improvements between 2010 and 2018 amounts to 86%. However, 65% of young people say they have learned less since the beginning of the pandemic because of the transition to new ways of learning. Moreover, 38% feel uncertain about their future career prospects. Additionally, the report notes that on average, 20% of youth in each country reported volunteering their time in 2018, and in the last 30 days of that year, 16.2% reported voicing their opinion to an official. Where the workforce is concerned, a quarter of young people comprise the global working age population in 2019, with 40% contributing to total unemployment that year. And that's all the time we have for you this week. Don't forget to subscribe to our YouTube channel and follow us on Facebook and Twitter. Thank you for watching and stay safe.